Today, 7 cash flow assets for passive income. Number 1. Rental properties. Rental properties are a great way to generate income and even passive income. The key to success with rental properties is to find a good location and to carefully screen tenants. If you are able to find a good location for your rental property, you can charge higher rents and have less vacancy. A good location is important because it will help ensure that your property is always in demand. It's also thoroughly vet potential tenants. Make sure the tenants you rent to are responsible and will take good care of your property. Although the process of screening tenants can take some time, it is worthwhile if it results in fewer issues later on. Although they do involve some risks, rental properties can be a great way to make money. Vacancy and tenant damage are the two most frequent risks. These risks can be reduced and you can get a good return on your investment if you can find a good location and thoroughly vet tenants. Number 2. Dividend-paying stocks. Dividend-paying stocks are another great way to generate income that is almost entirely passive. When you invest in dividend-paying stocks, you are investing in the company's ability to pay out dividends. If the company is doing well, it will likely continue to pay dividends. However, if the company is not doing well, it may cut or eliminate its dividend. But if you are investing in a well-established company with a strong history of paying dividends, this risk is minimized. The yield on dividend stocks is frequently low, which is one of their disadvantages. Many yields range from 2 to 4%. That yield could easily be consumed in 1 or 2 days. However, the company's revenue is what really counts. A 10% yield might sound appealing, but if the business isn't making enough cash flow to cover it, it's probably not sustainable, which could lower the share price. Even if a company is not paying out significant dividends, it may be repurchasing shares, which would be reflected in capital gains rather than dividends. The taxation is often different between dividend income and capital gains, but they both represent a distribution back to the shareholder. So don't get too confused on just a company's dividend yield. Always focus on what they are earning. Number 3. Farmland. Another asset that can produce income is farmland. Farmland is a special asset because the goods it produces, such as food and agriculture, plants less sensitive to growth than other goods like oil and gas. A type of inverse money asset, land itself may not see significant long-term growth, but its value should still rise in line with inflation as a whole. Moreover, as the population continues to grow in most countries, the demand for food will always increase, which may drive up the price of farmland. There aren't a lot of farmland stocks, and buying farmland can require a large upfront investment. But more platforms are working on making farmland accessible to smaller investors, even though it's not yet a major space. Number 4. Bonds. Bonds are another asset that can generate passive income. Bonds are debt instruments where the issuer agrees to pay periodic interest payments, coupons, and repay the face value of the bond, principal, at maturity. Most bonds have a term of 10 years or less, but there are also long-term bonds with terms of 20 years or more. The coupon payments on bonds are generally fixed, which means the payments don't change over time. This makes them different from variable rate instruments like floating rate notes and inflation-protected securities, where the coupon payments can change based on market conditions. Changes in interest rates and other variables may affect a bond's price. However, the bondholder will receive their money back at maturity as long as the issuer keeps making interest and principal payments on time. There are many different kinds of bonds, including corporate, municipal, and government bonds. Bonds can be purchased and sold on the secondary market through broker-dealers, but in some circumstances, they can also be purchased straight from the issuer. Many investors like to invest in bonds because they offer a high degree of safety than stocks, but it's important to remember that bonds are still subject to credit risk, which is the risk that the issuer will not be able to make interest or principal payments when they are due. There is also interest rate risk, which is the risk that bond prices will go down when interest rates rise. Investors can minimize these risks by diversifying their bond holding across different types of bonds and different issuers. They are not as popular among individual investors and traders as stocks because of their lower overall return, and they tend to be less liquid, but they are also a larger and more diversified asset class. Number 5. Peer-to-peer lending. Similar to equity investing, peer-to-peer lending, also known as P2P lending, is a type of alternative investment. P2P lending platforms pair potential lenders with borrowers who are looking for loans. In order to facilitate the loan, the platforms act as a middleman and charge a small fee out of the interest payments. Although P2P lending is riskier than other fixed income investments like bonds, it can provide higher returns. Borrowers on P2P lending platforms are typically individuals or small businesses with less than perfect credit. This means there is a higher risk of default, which could lead to losses for investors. P2P lending platforms usually require a minimum investment and offer a variety of different investment options, including auto investing and manual investing. Investors can also choose to invest in P2P loans that are secured by collateral, which can reduce the risk of default but may also lower the potential return. P2P lending is a relatively new asset class and is still evolving, so it's important to do your research and understand the risks before investing. Number 6. Intellectual property. Intellectual property is another asset class that is somewhat under the radar. Intellectual property includes things like patents, trademarks, copyrights, and trade secrets. The owner of intellectual properties has the exclusive right to use it, sell it, or license it to others. This means they can generate income from it without actively working on it. However, IP can also be expensive to create and maintain, so it's important to consider the cost before investing in it. There are many different types of intellectual properties, and each one has its own set of rules and regulations, so it's important to seek professional advice before investing in this asset class. It can take a long time before intellectual properties start to pay off financially. However, it can be a great way to generate passive income for those who are persistent and have the means to invest. Number 7. Real estate crowdfunding. It might come as little surprise, but numerous types of real estate investments appeal to many people for multiple reasons. 1. The tangible nature of the investment. 2. Low correlation with the stock market. 3. Multiple return components, assets that appreciate in value and also yield rental income. And 4. Tax advantages. However, the hands-on factor of owning, renovating, and maintaining a property as well as acting as a landlord deters many people from getting started. Thanks to the advent of fintech or the use of technology to enhance and automate certain financial transactions and processes, many companies now offer the opportunity to invest in real estate with or without owning property. Currently, crowdsourced lending or purchasing is one of the most popular and straightforward ways to begin real estate investing. By offering various levels of service, investment options, and points of investment in the real estate value chain, a number of online platforms meet this investor demand. By doing this, you avoid any aspects of the investment you might not want to be a part of, like owning or managing properties, but you still get exposure to these alternative investment options. Depending on type of investment you wish to make in real estate crowdfunding ventures, you have multiple options available to you, and you should do your research about this. So that was with the video. Thanks for watching. Hope you liked this video, and see you in the next one.